Welcome to another video by Steve Hill, CEO of AIQ Systems. Subscribe to our channel at the end of this video and let's start your journey to trading success.
Well, good afternoon. This is Steve here with AIQ Systems. You can probably see on my screen here, that's our website itself. During this session today, I'll be using our flagship tool, Trading Expert Pro, to run down analysis of the market down to group level into stock selection process. So this is a top-down analysis we'll be doing. Primarily end-of-day stuff. This is end-of-day data from yesterday, as today's data is not quite ready for us to do analysis on. But let's get started here. Let me just minimize this. It's our main menu for the program itself. Each of these elements is a different core functionality within Trading Expert Pro, including designing and building trading systems or correlation tools, hundreds of reports, portfolio management as well, data management, and our expert system and market timing are all included in there. So this session is being recorded, of course, for those who can't make it. The actual emails went out pretty late, so don't expect too many folks in here today. So to start with, where do we begin? I mean, group sector rotation, market, stock level, top-down approach takes a slightly different viewpoint on doing analysis as far as technical analysis is concerned. We start at the 35,000 foot level and look at the market using the market tools that we have in the system here. These tools include expert ratings on the stock market itself. That's an AI system that's been around for a while and provides us a lot of insight into the market direction and possible change in direction. We also have a way of slicing up the market using various tools that look at not only the Dow 30, but also the New York Stock Exchange and other markets' internals. And by internals, I mean the breadth data, new highs, new lows, that type of information, advances and decliners. The 400 rules that are a part of that market AI system within Trading Expert Pro allows us to get great insight into possible changes in direction and the current status on the market. So quick button here, market. This is actually the four area that we have keyed into our market area charting. Our primary market here is DJIA, which is the Dow Jones Industrial Average, which combines just the regular price chart of the Dow Jones with New York Stock Exchange breadth data. So for example, down here in my control panel here, I have a bunch of technical indicators that I can apply to a chart. Let's take one like the advanced decline oscillator. This is the advanced decline oscillator on the New York Stock Exchange every single day for the advances versus the decliners put together to create an oscillator. This is the Dow Jones chart here with three short-term, intermediate-term, and long-term moving averages, just the arithmetic rather than the going for an exponential moving average. And we'll look at a couple of indicators as well when we dive deeper into the analysis itself. So what we're going to do is just jump into our reporting area. As I was saying, for those of you who are not familiar with what we do here, the Trading Expert Pro 9.65 is our current version. We just had a quick look here at the market charts, and we'll explore some of those ratings in a little bit. But for our top-down analysis, the tools I use is part of our reporting system. It's called Reports. Reports itself covers both stock, mutual funds, sector rotation, group rotation, all within this one area of the program, which is highly configured for our existing end-of-day analysis. What I'm looking at here is something that's generated every night for us automatically when we get data into the system. And this is the first place I go to have a look at what's going on, which is the market log. So there's a lot of information on the screen here, but we'll cut to the chase and just look at some of the basics of what's going on here. What we're looking at here is a slice and dice of the market itself. You have three things that are critical for us in establishing where the market is today. The first thing I look at is date, obviously is today. There is a 1 here and a 98 here. This is our market expert system, which has been analyzing the breadth of the New York Stock Exchange and the price action of the Dow 30 and done comparisons between the two. The 400 rules that are firing every day, some give us, the rules neutral. Some says, okay, this rule did fire. Some give us rule didn't fire or fired in an opposite direction. There's a bunch of different outcomes that are available that give us a rating between 0 and 100. If it's 100 on this side, then that's a very strong up signal. If it's 100 on this side, it's a very strong down signal. These signals are often counter trend and a little bit early. And when they occur, it usually does mean there's a likelihood of a change in direction coming. Current status for us is 199. So that means the last high signal, anything over about 95 is pretty strong. So the last signal was 3 days ago. That was the last strong signal saying, the market may change direction to the downside. Notice here where it says ER, that's for expert rating, 84.16, that's today's rating. Anything below 95, we're not particularly interested in, but it records that for us anyway. And as we know, this market rally, I guess, yesterday after the announcement of the pushback on tariffs for the EU, this moved up pretty strongly yesterday, but often it can be a few days early, and we use another indicator to confirm how good this rating is. But for our day-to-day analysis, if we're looking to go long or short, and we can go both with the types of reports that we have here as far as group and sector are concerned and stock analysis. The question is, where are we in the market, and how does that feed into our mindset for looking for trades? And what's clear here is that the Dow Jones itself, these indicators here, MACD oscillator, MACD directional movement, volume accumulation percentage, and many of these are well known to you. These indicators here are based upon the price action of the Dow itself. There is a bullish and bearish indication here. And as you can see, they're moderately bullish, not surprising after that move on the Dow itself. The key thing down here, though, is these indicators are based upon the breadth of the market itself, which shows a contrarian picture to the Dow because the internals are pretty negative. I mean, pretty negative. AD oscillator is just turned up a little bit, but all of these are based upon the internals of the market itself. The only broad market indicator that was very bullish was the high-low indicator was very bullish. So that's the number of new highs, 52-week highs versus 52-week lows. So we're getting some contrarian views on the market itself. The breadth is moderately weak. The Dow is modestly strong with that one big rally day in there. And we also throw in here relative strength to this S&P 500. And in this case, with that big rally, this is kind of looking bullish in relative to the S&P 500. So from my 35,000 foot viewpoint, this is a cautiously bullish, but only cautiously. However, this down signal that we had on the market itself makes me think if we do anything bullish, it's going to be very short term. And maybe we're at the beginning of a move to the downside, so we might look for some shorts. So we'll look at both ends because we're coming from the high level, working our way downwards. The next area I can look at within our reporting area here, I can go straight to sectors. Sectors themselves just have a very broad look on the major sectors on the S&P 500. By the way, this is all generated on the S&P 500 groups and sectors. The groups and sectors themselves, we actually create an index out of the stocks within the system. And that gives us full control over which stocks we'll be looking at because the index itself, the S&P 500 index and its appropriate groups are calculated by S&P. We use our own internal calculation so that we have exactly the numbers that we want to see as a consistency throughout our analysis. So I clicked on sector analysis here. So as you can see under sector reports, there are a bunch of different reports that are within the sector. There's different ways of slicing this up. Whether we look at moving average crossovers, let's just look at one for the moment. The very first one is a trend-based analysis on the sector. So this is the primary S&P 500 sectors. You've probably heard most of these out there. Information technology is at the very top as far as a trend is concerned. and real estate is at the very bottom as far as the trend is concerned. So you can see this is what's already in the trend. And let me just illustrate how that looks, because a trend itself, so when I take this and I'll just click it into charts here, remember, information technology, we're in a trend to the upside. I don't think anybody is going to disagree with that, right? I mean, that's a pretty good trend to the upside on a daily price chart. So that's why this information technology sector sits at the top of the report. With a situation like this, you could say, well, maybe I've missed most of the move. I don't know. But that gives you an idea of what's at one end. And when I flip back into here at the other end, I will chart what's down the bottom. And what's down the bottom is the real estate. Not a terrible trend. I mean, it's got a short-term trend up, a pullback here. But remember, this is a longer, sort of a longer-term picture. The trend score looks to evaluate a period over both the last 3 quarters of the year, giving a greater weight to the most recent quarter. So as you can see, that if you could connect these peaks up, you can see we are definitely in a lower high situation going on here. There's been something of a rally back up during the month of April, although we're kind of looking in a sort of transition period here. So that's sort of the outer marks of the sector area. So how do we go about deciding what's a good sector? And then we'll have a look at what's a good group. Within the sector, because it's such a macro view, there's quite a few stocks in each of these sectors. We use something called a delta trend score to give us an indication of where the sector is compared to the previous day. The bigger this number is in parentheses, the more it's moved down from the previous day. If it's not in parentheses, that means it's moving up. So only 2 of the sectors have had very minor moves up. The rest are moving down. So that's quite a significant overview at the sector level here. If you were thinking to have a look at a sector to go short, you might want to see one of the sectors that's moving down with the greatest momentum. So something like the sector here, which is the healthcare, has got a very strong delta, which means it's moving down quite sharply. But let's have a look at that real quickly. Pop that in here. And what's happened here is you can see compared to the price chart we saw on information technology, the healthcare sector itself has been, besides this rally recently, has been coming down pretty significantly. I mean, that's quite a high level to come down to getting down to this sort of 5,000 level from 6,500 up here. So given that we know there is a negative signal on the market from our market timing system, given that also there's some internals within the market that are looking a little weak, we could be looking in the health sector, because this sector seems to have the greatest momentum downside. What we can do is do 2 different ways of moving our way down. So if we're going to go short, the health sector looks a good candidate place to go. But that's a big sector. So how would we go about looking in there? Well, 2 ways of doing this. We'll do it the first way, which is we've identified a sector that we think may be going down. I hit an enter key on my keyboard here, which is part of our quick key in the charting area. And it flips me to this view here, which is a group sector explore view. Everything we do in this platform is based around lists. So these are lists of stocks, whether they're in a hierarchy, which I call linear, where it's just a bunch of stocks that you've got in the list, or what we have here, which is the SP 500 itself. The SP 500, you'll see down here, this is called a group sector list. And it's a pyramid. It's got the S&P 500 at the very top, which is kind of like the SPX equivalent. Then it's got those sectors. Remember, we looked at those sectors within the reports a moment ago, just abbreviated here. But the next level down from health itself, this is the financials here. If you go down to the next one, it's health. Look what happens. It opens up with this hierarchy of groups within there. So what we can do is, if you're a chartist like I am, and I'm looking at charts, I can what's called explore down into the groups. I can either do it by clicking in here, or I can press this arrow here, and it goes to the very first group, which is biotechnology within the sector itself. So the health sector is going down. It's got a more accelerating down than most of the other sectors, in fact, than all the other sectors. So within here, we're going to have leading and lagging sectors, sectors that are leading the whole sector. I mean, groups that are leading the whole sector down, And there'll be some that are laggards. So when there's a move to the downside, it's kind of nice to get into those that are maybe the laggards haven't caught up with the others yet. Because some, like this one here, has had a pretty good move down. Remember when we looked at the sector itself, this has had a pretty good move down in the double bottom here. So this is one of the early leaders. Biotechnology is pretty volatile. So we can look at the next group and look for a more suitable candidate. So remember I said, you've got leaders and laggards. Look at the healthcare distributors versus the sector. This is pretty bullish in comparison. However, there's a bit of a topping area going on up here. There's a definite resistance at this particular level in here. So given a market that is sort of in flux, and given that the health sector itself is going down, this is a segment or a group within the sector that might also be playing catch up. So it's worth looking in this group to see are there candidates that's already bounced off of this resistance level or here and will be a good candidate to go short. And we can go down by either using the arrows down or clicking on the stock itself. What I'm going to do is just use the arrow and take me down to the first stock. And so remember, the groups, just like in sectors, are made of groups that have got leaders and laggards and those that all move together. Within a group itself, the stocks are the same thing. You have leaders and you have laggards and you have those that are outliers. It's always often the case when there are companies that are very diversified, but are within a particular segment or group within a sector. Sometimes those stocks may move slightly different from the majority of the stocks because they're more diversified. So in here, we can see, remember, we're looking for a candidate to go short. This one's had a pretty good down move already, but it has bounced a couple of times off of the 21-day here. So this could be a good candidate bouncing again off of the 21-day. You've got a little bit of room down here before we meet some support if you were to go short on this stock. So that's one I would be like, I'm going to tag and have a look at that for a little bit later with some indicators, because right now I'm just doing like top-down approach and finding potential candidates. To tag it for a little bit later, I just get myself, I set up my tag list, set the tag list. I'll call this a new one. And, we're doing analysis right now, so it's 528. Although I should really call it 527 as the data from yesterday. And I'll call it top. And this, all I'm going to do here is I've created this list, and every stock that I tag will end up in another list for me to do some more analysis. So this is part of the speed of being able to do analysis like this. I'll just tag this, and it's already tagged into that list for me. So this list here, which we just called 527 top, now has that one stock in there. You see it, BMI. Go back to my S&P 500 here. So that's possibly, looking tonight, maybe if it bounced off of this 21-day again, it's a candidate to go short. Look at the space here we got down here. It's quite, all the way from 47 and change down to 39. So there's a little bit of room down there. But it's a good looking candidate. So the next one within this, I can just move sideways, is Cardinal Health. Well, Cardinal Health, look at that. I mean, it's completely opposite, right? This thing is flying. I mean, this almost looks like a long candidate to me. Look how it's bounced off the 21-day all the way along this particular part of the move. It had this nasty pullback in April that most stocks did. But for a short, this is probably, got a little bit too much momentum. So we skip over that one. Here's Henry Schein Incorporated. These are all S&P 500 stocks, so they're all got plenty of volume, plenty of liquidity, good range today, so it's easy enough to get in at a decent price. And that particular stock, a little bit, it's rallied almost 50% of the way back up from this down move here. It is above its 21 days, so probably not an easy candidate for going short at the moment. Here's another one, Mackeson's. This one as well is pretty strong to the upside. It's been playing off of the 21-day here. Unless we get a really strong cut through the 21 or the 50, and then there's really nothing here on the short side. Remember, we're looking for shorts within this sector, healthcare sector, which is made up of the groups that are within there. And so this group was a good looking candidate, but it's got some strong and weak stocks in here. This one, again, will be possible one to watch for, although it's rallied up to 50%. It hasn't really made much progress beyond there, but I still like the BMY is the better one. So remember, we're looking at the groups just as a chartist point of view from a weak sector, health sector, weak sector, and it's going down. looking for short candidates in a market that's in a little bit of flux. So I can just move to the next group. I've got all these other groups within there just to have a look and see, which group looks the best, has the best candidates to go short. So this one here, this is very similar again, healthcare equipment. Nothing exciting in there, not as good as that first group we looked at. Let's pop along to another one. This one's been moving more in a sideways fashion. This is healthcare facilities. And again, this one looks like it's just bounced off the 21-day the group has. So we're looking for shorts. We'll look at longs in a moment. Let's move to the next candidate group, life sciences. This group's been really hit hard. It's a long way down there. Again, this one's probably one to avoid at the moment. You may have already missed the move. Look at the support down at this level. We can skip through that and go to another group. This group's a little bit better actually because the managed healthcare seems to be like the poor man in the sector at the moment. It's come back up, tried to get close to the 21-day, but it's really been clobbered. I mean, it looks to me, this long bar here isn't particularly significant as a support level. It looks like this could go down further. Let's have a look at some of the stocks in here. Again, we'll see a mixed picture. So this is Cigna Corp. After a very nice measured move to the upside, it sort of broke away down to the downside here, pops back up to the 21-day and gave up again. This one's a definite one to watch. Look at it coming close to the 21-day. Again, if it gets close to that, it's probably a great short candidate. So I'll tag that one to the list as well. And let's have a look at another one in here. Next stock is Centene Corp. This was similar to one we saw earlier. It's very much in a range, all the way down here. This is providing great support. I mean, really, would you try and go short, hoping it's going to break through where it bounced here, here, and here? Probably not. So might be a candidate to go long, but you're in a sector that's showing weakness. Why go against the trend? This one's similar type of thing. We had some support down here. It's going to hit here. We're looking for short candidates in this sector. Not a good one. Very similar here as well. Kind of missed those mover. It's moving sideways. This one is Molina Healthcare. Pretty unimpressive chart. Not a lot going on here that gives me a great deal of information of a buy. I mean, it's been above and below its 21 days. It's not really doing a great deal. Sometimes it's a lot down, sometimes it's up. Pretty good range within the last sort of 2 weeks. But hard one to do a short on. I mean, you've got range down here to 262. There's a bit of room. I think maybe if there are better candidates, since it's already blown through the moving averages more than one time during its move down. And again, it's not a very regimented move. And of course, United Health Group has been absolutely slaughtered. This stock has got a lot of gaps in here. I mean, it's all the way down here. And that's really one of those stocks where there's a possibility you could play it, but there's no, it hasn't come anywhere near getting back to that 21-day again. This thing's been brutally shot down, and there's no, not the sort of stock I like the look of. There's no sort of clarity to the pattern itself. Lots of gaps up and down. So we'll look at the last three groups in here before we switch over and look at the bullish side, and then we'll have two sets of stocks for us to run a quick analysis on using some technical indicators. So again, with the health sector is looking a little bearish. We're trying to take ourselves into a situation where we want to go short. The market itself, when we look at the 35,000 foot view, is in transition, a bit of flux. It's a little difficult to gauge. Has been a pretty difficult year, of course, with wild swings in the market itself. So we're always going to be cautious, not going to be doing very long-term plays. Healthcare supplies. So this group, remember, health sector's strongest moving down. It's still got room to move down to the downside. We're finding groups within that sector that are great places to go find stocks. This one's a little better because even though it blew through the 21-day up here, it's actually the 21 days going back down here. The group itself, there's a little bit of room between there and this bottom down here. So let's go look at some stocks within there. There's only 3 S&P stocks in this group. Strangely, some of the S&P groups only have 1 stock in it. It's just the way that S&P does this thing. So we've got 3 stocks in here. Align Technology looks just like the group, right? Very, very similar. It's come right back up to the 21-day. I'd say that's a pretty good short candidate. You've got room between 179 and 140 to go to the downside there. We'll tag that one and add it to the list. Next stock in here is, oh yeah, Cooper Companies. So Cooper Companies is pretty similar, really. Again, we've had this this sort of move up. It's blew through the 21 here, but it's like really the 21 days going down here as well. You know, that one's also a candidate we can have a quick look at with indicators. So I tagged that as well. And this one, you know, West Pharmaceutical Services, this large drop down, I think, you know, this is exhausted. There's nothing here that says it's suddenly going to go all the way down again. And the other two are a better looking chart. Moving to one more, let's move one more group because we don't have a huge amount of time today. This is health services within the health sector. Looks like a 50% retracement from that move down, and not a lot of clarity in there. So we'll move on to the last one within here. Pharmaceuticals themselves, very strong move to the downside into the early part of April. You know, a lot of the tariffs and other things might have affected that. More of the rumor and the news was affecting some of the stocks within here, let alone you know, other things going on with within the pharmaceutical sector. This looks to me like it's kind of getting itself into a triangle here. Hard to see, you know, which way it's going to go from there. So I think we'll stick with what we have on the short side. So we'll have a look at those short stocks, and then I'll jump back in and we'll do some long stocks. So what we've done, we've taken the 35,000 foot view. Market's kind of in transition. The internals are weak. Found the weakest sector, which happens to be healthcare sector. And we've looked for weak groups or groups that are, you know, rallied a little bit and turned back down. And we've gone for the stocks that are doing the same thing. So we're lining all the eggs in a row. So I switch here to this list that we created. And you see those are the stocks that I have in there. I'm just going to close all these charts for a moment. So these are the stocks that I have in there. I hit enter and I get my indicators in here. I'm going to have a look at a couple of things on here. Volume is good. And I'm going to put on MACD on there just for, actually we'll do an MACD oscillator, I think will be better for us. And we'll add those to the chart and let's see what's going on here. Give me a second and let's go down here. I don't think I've added the indicator back in there, or have I? There it is, MACD oscillator. And I need to put the volume on there as well, right? So let's not add that. Let's not add that. Let's go volume and then MACD oscillator. Right, so I've got to use those two indicators and keep them for the charts for the moment. So I save those indicators. And remember, we've got 4 stocks that are candidates for the downside, right? We're looking for downside movement. So bouncing off that 21-day, this is really good type of thing to see. The volume itself, which was interesting, there's a little bit of a volume tick up, which is good. Generally, if the volume had been continually going lower and lower, you'd be kind of thinking this thing is exhausted. So there's a good room here for a downside move coming from the 178 level down to the 143 is your maximum. So it's pretty good. That's one probably worth checking out. The oscillator itself and the MACD has been pretty much moving in sync. It's in negative territory, which is what we want to see anyway. So a good candidate. The next one in this list, remember we tagged 4 on the short side. Bristol Myers Squibb. This one's got a fairly similar pattern. The only difference here is this oscillator is pretty strongly positive. So I'd probably skip this one. And the other one's a better candidate based upon that confirmation. The volume did tick up when it came back up to here, but I think we'll skip that one because of that oscillator is looking a little too strong for us. Our next candidate stock here, which was Cigna Corp. Again, the volume has picked up again in this area here, which is good. If we've been continually declining volume, probably not a lot of players, not a lot of room for us to go down. The MACD oscillator is negative, although it's come back up, it has been moving sideways. So that's a pretty good candidate stock too. In a case like this, maybe you'd wait until it bounced back up towards the 320, the 21-day, or the 20-day line actually. But you've got lots of room to the downside here, all the way down to the sort of 260 level. So that's a pretty good candidate too. The last one here is Cooper Companies. Remember, it's bouncing off this 20-day. And at this point here, great volume. Volume's really good. The MACD is still, oscillator is still negative. So that's a pretty good candidate for sure. You've got room from the 80 level down to about the 70 level. So that's a 10% room there. So plenty of room for a short. But again, very tight stops, I would think, on these because the market is in such flux at the moment. So that's looking from, because we have a flux market, it's in transition almost. We did the short side. What we can also do is look at the long side. We'll use a slightly different approach. The long side, instead of going to the sector and finding a great sector, we'll go straight to the group level. So you can do this, go straight to the group level, and then look at sector later to see if it's confirming or in the same direction as your group. And we'll go straight to the group analysis. Notice the number of tickers in here. These are all our internal group charts for the S&P 500 groups. You can see there's quite a lot of them. That page full of groups in there. Two things before we do anything else in looking for candidate groups to go long, for example, is I'm always interested in a number of stocks within a group. When you only see one stock in a group, I usually avoid those because I'm much better at the sector analysis where I've got more stocks gathered together in one basket. So I have no idea why they still do this. They have all these, like here you have alternate carries who's got one stock. Trading companies and distributors has one stock. I mean, what that means is if there's only one stock in a group, the group action is exactly the same as the stock action. So for our purpose, when we're looking from that higher view coming down, we want groups with more stocks in it, but we look for the same type of thing in here. This is sorted by trend score. Trend is, everybody knows something's in a trend. We don't really want to go too deep into all the different indicators that make up the trend. Suffice to say, the higher the trend is, the stronger the trend is to the upside. The lower this is, i.e. in parentheses, the stronger the trend to the downside. Trying to get into, getting into a group like general merchandise stores that's already in a strong trend is kind of hard because you might have missed the move. And so what we look for in here is we look for something that's trending up, but we look for an acceleration, and that's where this DTS column comes in. The higher the number to the upside in here, let's see what these in parentheses means they're going down. The higher the number to the upside, the more this group has moved up within the list itself. And here's a great group candidate here, gold. However, it's only got one stock in it again, so that doesn't give us a great deal of confidence. The next one that's moving up, I mean, a lot of these groups are moving, trending down because they've had a great move already, or they're beginning to roll down. This one's pretty good looking, which is tobacco. So it's in a modest trend to the upside, but it's accelerating up. So, and this one has two stocks in there, so that's one for us to go look at. So what we do, we just click and jump it into charts here. And now we're in the tobacco group itself. So remember, this group has a trend up, and the trend has been accelerating. So what's been happening here is, the trend is pretty long-term trend, right, on the tobacco group itself. Well, ethical regards aside, this group has definitely been performing pretty well. Right now, I would say we're getting close to a double top up here. I'll just take these indicators off for a moment. This looks to be close to a double top area, but it's possible one of the two stocks in here might have broken out or might be on the cusp of breaking out. If they're not, then we'll maybe move and look at another group. So I switched to my S&P view. Remember, I said two stocks within that tobacco group. Not surprising who they are. First one is Altria. Notice that this one hasn't reached all the way back up to the high level it had here. It's pulled back to its 21-day. That's pretty good. There's a possibility of a bounce to the upside here. Remember, we're looking for a long candidate. Only draw back on this between 58 and 59, and this area here, which is soon to become a resistance. There's not a lot of room, maybe $3, but it's a possibility. We'll tag that one. I'll tag it to a new list because this is going to the long side. Oops, didn't want to do that. Got a bit click happy there. Set tag list, and I'll make a new tag list, and we'll call this 527 up. This is so at least I know what it is I created this list for. And so I can then quickly tag in that one. So that stock's got a little bit of room, but I'll have a look at the technical indicators in a moment for that one. So we tag that, and it's now in that list. Obviously, Philip Morris is going to be the second one. And as I mentioned, one's going to have broken out. So Philip Morris has broken out to the upside. So you've got one behind the double top and one above it, right? So the averaged out, that's why the group has a double top in place. So this is not bad. Actually, we'll tag that as well. I mean, really, you're buying into something that's making ground into new territory on this particular stock. We'll check out the indicators as well. So that's one group there. One thing I'd like to look at every time I start with a group level, of course. So this is tobacco. Guess what sector this is in? I don't have to guess. I just press the up arrow and it'll take me to what sector it belongs to. Consumer staples. Consumer staples is a pretty unexciting sector. And that's not surprising because it contains all the staple stuff that we all need, amongst other things. So, detergents or Johnson & Johnson and all those things that are really stable. This thing doesn't move. Well, it does move. But again, I mean, look at the chart of this. It's just, I'll go to a weekly. It's gone, it's in a massive range. It just doesn't move as a sector. What that means is it's not a bad or a good thing for us. It's not like if the sector had been going very strongly down, it's possible it might drag down the group that we just looked at, which is fairly bullish. But as it is, this is neutral, so we're okay with that. So that was that tobacco group. I mean, look at the tobacco group, which is part of that sector, and the difference in the chart pattern, which is why that tobacco group was a very strong trend. It's a massively strong trend to the upside. So as both of these stocks are pretty good candidates. So we'll look at the potential with the indicators in a minute. So quick back into my reporting area, just a reminder for those of you not familiar. And this particular, the main menu of this program is basically several different programs together. This is how you move around from one program to another. Here is the reporting area. We were looking at the charting. There's a market charting area, which gave us our expert ratings that we looked at briefly earlier. So what else do we have at the group level on the bullish side? What else is there on the bullish side in here? Not a large number of candidates, even though that gold, the gold had the biggest move to the upside, but there's only one stock in there. But I'm just going to check it out anyway, because gold has been one of those strange players in this particular market. So remember, this is the gold group with the S&P 500. The only stock it has in there is Newmont Mining, so it looks exactly like the group. So what do we think of that group? Well, the stock itself, I mean, this means it's been in a good trend up, and the trend has been accelerating, and it definitely has been accelerating. There's this pullback here. This might be a candidate when it hits this particular 20-day average right here. But for the moment, I'll just tag it and pop it up there for later analysis. So flipping again, you can always come back in recording if you don't know what we're doing in here. It's group analysis, top-down analysis. We know our market. We did a sector for short side, for a long side. We're having a look at some of the groups in here. There is another group here that has 10 stocks, but that's still going down. There's not a lot of groups that are moving up strongly that are in a good trend. The soft drinks one is moderately okay. Let me just have a look at that one. And so both soft drinks and industrial gases, a fairly modest trend. I mean, at 56 is modest. We usually want it higher. And it has accelerated to the upside. It's got 4 stocks in it. So we'll have a look at that group, see what that's doing. Pop that into the charts. So soft drinks, this is why it's at the 56 level, because it's actually had a great start to its moving up, but it's kind of got itself lost in a sideways move here. Almost like there's nothing happening within this period here. A quick look down in the stocks may give us a similar view. There's Keurig Dr. Pepper. Looks to me like it's going down. Better looking for Coca-Cola, but no clarity there, right? I mean, it could bounce off of this 21-day. Not a lot of room to the upside on that one either. Monster Beverage Company, this thing's just stellar and it's blown its way out of the top here. So this one is not bad at all. I mean, the group is moderate trend, but Obviously, Monster is leading the charge. I will tag that. It's a little too strong a trend. A pullback would be nice, but we'll tag it in the list anyway. And the last one in here is PepsiCo, which has been totally destroyed. This is this bouncing back onto its 20-day average. It could just continue down here. This is very, very, very minimal support area. PepsiCo is really taking a battering. So that one's not a good long candidate for us. So we'll just go and have a look at that. The two stocks, three stocks. This is 527 up. So it's four stocks because we put both of the tobacco ones in there. Let me get rid of this. And we'll start with the Monster beverage and the same indicators with the volume and the MACD oscillator. If we're going long, remember the group is in a moderately up, moderate trend, not a great trend. 56 is not great, but Monster beverage is obviously in almost a 45-degree up move, bobbling along on that 20-day average. Never really got back down to the 50 at all. So there's still, there's no real, when I look at a longer term chart, it's blown away all of this level here. So it's already in unknown territory, you might say, which is good. Means that, there's nothing to stop it. There's no resistance. So it's a possible candidate. The volume itself is interesting. Let's have a look at that. So the volume here, that's a little flat. There's a little bit of a spike up here. It's not, the volume looks okay. It's not doing anything stellar. It's not like it's gone through the roof and we're having a blowout high. And it's not like the volume's completely faded away, in which case there's no more buyers. So it's a pretty good looking stock. I think, you keep your stops down below this sort of 20-day average level and use that as an initial stop and just let it keep moving its way up. The second stock in that list we have here, which was Altria. This one, this bounce off of the 21-day average is not bad, but it's not a lot of room up here to the upside still. I mean, we're talking, let me just switch on my mouse here. Your maximum is 61.2 before you reach that, what is an all-time high. So not a lot of room in there. I think I'll skip that one. Oh, and the other thing is the volume is just kind of fading away, right? So maybe there's no buyers for that. So two more looking here. Newmont. So the gold group looks exactly the same as this. It's a shallow 35-degree angle on average for this sort of slope here. It's not doing anything spectacular. The 21-day or 28-day average, sorry, is right here. There's a possible bounce off of there for a buy candidate. There's a little bit of room on the upside here to 57. So you could be looking by the time you get to here, maybe 52 to 57. So not a huge amount of room, but enough to take a few percentage points. Again, tight stops on all of these stocks. The volume was good, and the oscillator itself had just turned positive, only just. So that's all good. So that's a pretty good candidate too. Yeah, so pretty much the last stock that we're going to look at before we wrap it up today is Philip Morris. It broke out, but that's pretty good. And it broke out, and the volume's pretty good too. And the MACD oscillator is positive. So this is another one. So two long candidates there because they're in groups that are doing okay or are accelerating to the upside. And the sector, when we looked at the sector itself, sector was inconclusive, but at least it wasn't plunging down. So you're lining up segments of when you got the market and it's unsure, you got a sector that's kind of in sideways. You want a group and a stock to both be doing the same thing. And this is kind of what we look for when we do a top-down analysis. So that's pretty much how we do it. Any questions? I know there's not too many folks in here today because we only just sent out notification on this event. And of course, we get the recordings out to pretty much anybody who registered for the event itself. Any questions, pop them in chat. If not, I will be signing off of the air right now. Oh, in 1 minute at least. Great. Thanks for your time, everybody. We'll talk to you next time.